All right, guys, welcome to a new video. Today I'm going to try to keep it short and concise, and we're going to be talking about models, buy models, and sell models that pretty much shape your overall narrative when it comes to trading the markets. We're not going to dive too deep into the theory just yet and start debunking a couple concepts. We're going to keep it plain and simple in a very broad manner so that you understand, especially with recent market conditions, the situations that can help support your narrative. So overall, when we talk about buy models and sell models, some of you might know them as market maker models, although don't get me started on those just yet. Although the theory can be very much, let's say, the same, what we're doing essentially is we're pairing orders at, let's say, areas of high liquidity into areas where price is considered either cheap or expensive. So what we're trying to do is we go from a state of seeking liquidity to having found liquidity, injecting new liquidity in, and then distributing it at those prior levels where price was considered either cheap or expensive. And the big difference in that concept, and especially when you start looking at it from that aspect, is that you will be a lot more hands off your charts, not trying to force setups, because I notice that a lot of new traders, they will learn theories and they'll learn very technical based theories. And once they apply that and they try to use that one specific pattern over and over again, that is when they start making quite a couple of irrational mistakes. So my goal today for you guys is to improve that narrative, use old theory that you might know, rewire it in such a sense that it might just click for you from a better angle, and understand that it's very, very much applicable to all time frames. It is very easy to understand, and it helps kind of create that overall range that you can start trading in. So what we had last week was one of two things. So we're going to start from the daily time frame, right? We're going to start from one thing that is very, very clear, is always going to be our higher time frames. Once you understand that that is that parent figure, you want to look at relative levels that are considered cheap or that are considered expensive. Last week's example, we had one of two things. We had pretty much this liquid market condition that was right around here, right? Which is overall kind of still our draw on liquidity for the longer term of things. But what we also noticed that if you were to convert that into, let's say, something like a low resistance liquidity run, you could have something along these lines, where if you were to add coordinates to your charts, which is something that I do very much advise you to do, because it allows you to keep these price points at the back of your head, you'll notice that we had relative areas like this, which were kind of our target. Once Monday opened like this, no, we went a couple candles too far. Once Monday opened like this, you could see that we actually had one of two things. We had our first bullish candle after this run of many, many bearish candles. And this ended up being our week low, right? Being our sell side liquidity. After you understand that this was the case, we actually had one of two things, and it became a very easy play, especially the shorts that we caught with AO as well, something along these lines. The general gist of this concept is actually very simple. It just entails that you are going from one array to seek liquidity, to then inject new liquidity into the market to go back to areas which are considered cheap or expensive. Fractality plays a huge role in this. So we're on the daily now, and if we were to look at our middleman time frame, H1, you will notice that it actually becomes very, very clear as well. So let me quickly get rid of these drawings. You will understand that if we have something like a sell model in this case, you can see that we have that week low that formed pretty much on that Friday the week before, and we have a clear draw on liquidity that we want to target, right? We have this level where we're very, very clean of, okay, hey, this is going to be the main draw of the week. Another key aspect that we can understand here is that we had this huge inefficiency that was left behind. So the goal when you have these overlapping arrays, right, and in terms of liquidity, we want to understand we're going from, again, one area, I want to drill this in the back of your head as well, that we are going from, let's say, this buying aspect of our curve to this selling aspect of our curve. And the initial goal of last week was to get above this midpoint, right? This being somewhat of that more sensitive area of price where you could anticipate, a deeper injection of liquidity. That wasn't necessarily the case. We ended up being around here, and you'll see that once we go through it. But understanding just the simple concepts of a buy model and a sell model. So in this case, what we have is a sell model being this PD array, pretty much this imbalance here, this huge inefficiency. That is going to be something that you can trade up towards, and then from there, you're going to be going with that fresh volume, with that fresh injection once you have confirmations to trade into your overall target, which for us was obviously that week low. To explain that a little bit more concisely, you can see that we had these levels, right? And what makes it so interesting is that once you understand how price kind of works, you can really time, let's say, these movements and start dialing in. Right, and I'm going to be showing you guys my charts after this as well, the ones that I do here. You can see that I've got FXCM, but I normally chart on Forex.com, and you can see the annotations that I've done there. But I just wanted to start kind of blank, kind of fresh. So what you notice here, right, is that we are trading into a POI, right? Our point of interest, where we're like, okay, from this point onwards, we're going to be looking for shorts. And that is exactly what we did. We wanted the midpoint, but we got that high of the week pretty much on that Tuesday right here, right? This being that high of the week. And you can see that once we had these levels, right, we actually shifted our state of liquidity in a sense that we had big bearish candles, right? These bearish candles that you can see kind of taking over that are being traded into this distribution where buyers are taking over after that and then kind of distributing liquidity. You can see that now these bearish candles actually came with a lot more aggression, a lot more intense, so to say. All in all, this is when we, and especially guys in the group as well, started looking for shorts, targeting pretty much that previous weekly low. We had these targets intact, and we had these targets intact as well. So I'm quickly going to step over to my charts as well, that you can kind of see how we anticipated everything that we did on M15. Looks a bit messy, but you can see exactly how we had these annotations right here. And this was that short that we caught as well. So all in all, what I want to kind of conclude upon is that we have buy models and sell models, right? So you have to understand that on your higher time frames, you need to have some sort of POI. So in this case, what we had was a live market example where price is, creating this liquid price action. Price is transactable from these areas. You might know it as original consolidation, but maybe the shift of theory can help you better understand the concepts with a more applicable way of understanding the markets. So transactable, big market making participants are able to transact at these levels. We then break to the upside, right? And what then occurs is that we reach that higher time frame array. So this being that imbalance that we had. From there, what you want to do is you want to wait for some sort of confirmation, right? Where actually you're clearly targeting, let's say, interim liquidity levels. In that case, it was sell side liquidity that you can see right here. I've got those two annotated as well. Interim sell side liquidity, interim sell side liquidity that you can target. And from there, you understand that once you have those confirmations, you actually pretty much have a guarantee in terms of what game plan you need to implement. right? It's really no rocket science because you have that original place where you started your thought process, and from there your thought process actually goes into that higher time frame array, and from there all you're doing is going back to point A, because this move away from that transactable market structure, transactable liquid market conditions, actually confirms that, hey, we're going higher just to go lower to target these levels, right? So I hope that makes sense for you. I want to gently introduce you guys, especially to the new viewers as well, introduce you guys to these concepts, get you guys used to my way of explaining theory, because I truly believe that it is a lot less intense, and it really helps you to generalize your gauge on the market, and that it could definitely give you that better edge to make better choices on the market. So yeah, let me know if you guys have any questions about this topic or general questions about anything that I do. You can leave a comment on this video or contact me in my DMs. And if you really want to take it to the next level, you know where to find me. Just send me a DM on Instagram. We can get talking, and hopefully that'll be your final step in your Forex journey as a whole. So yeah, take care.